All right, good morning and welcome back, agents, to our weekly life webinar series. I am Adrienne Ostris.
And I'm Brent Carter.
And we are super excited about today's topic. I hear these products are hot in the market, and so we are excited to give you a full training of how these products work. I think it's newer for EquiTrust.
Yep.
So super excited that we're going to have David on with us this morning to talk the specifics about this new bridge product.
Yeah, so it's really good. Looks like they're going to tie some fixed index with some long-term care rider.
Yes, absolutely. Yeah. So we absolutely appreciate every single one of you joining us on these trainings. If this is your first time on this weekly series, welcome. We absolutely want this to be more of a conversation and not a presentation. Yes, so we do these live for a reason, right? We want the communication, we want the comments. So please find the question box. I think it says questions on your end. It might say comments. Yes. So please find that box. Please communicate with us. Let us know you can hear us, see our screen. Let us know if you're already contracted, if you're already selling these products, or if you're new and you're really interested in starting to offer this, because I know that we have a wide variety of agents.
Yeah. And this is a good place to start. So what we were just briefly talking about before we jumped on is there are other products that have just been staples. And so I don't know if, everyone that I've talked to or we spoke to, if there's been ever an annuity case we went through, if EquiTrust is the right fit for, we definitely try to run through EquiTrust. They've got a lot of good, easy products. Is really the ease of the product is most important when you talk about annuities. And so this product here, I don't expect anything different from them.
Yes, absolutely. We are so excited and super excited to have you on, David. So please give a warm welcome to David. Are you there?
I am here.
There he is. All right. Sound is good. We can see your screen. Like I said, there's still a few people jumping on now, but we definitely want to go ahead and let you get started. We don't want to waste any time. So if you want to tell us a little bit about yourself, and you take the wheel, David. Thanks again.
Thank you, David.
Yeah, thank you. Yeah, thank you so much for allowing me the opportunity to be on the call. Again, my name is David Hall. I'm one of the internal wholesalers here at EquiTrust. I've been with EquiTrust for about 4 years now. Overall in the industry, I've been about 16 years total, whether it be from a carrier perspective or a IMO perspective. So kind of nice to be able to have both ends of the spectrum when it comes to this product, and just being able to present it and kind of really putting the primary selling points out there for you. So again, thanks for the time and the opportunity to be on the call today. Today's topic, as Brent and Adrienne had mentioned, is bridge. So this is our newest fixed indexed annuity with long-term care and wellness benefits product. And definitely not the first type of a product in the marketplace when it comes to this type of a kind of a product design with the LTC benefit or the features. But we'll go through and kind of talk about how this product is different in comparison to kind of some of the other products out there in the marketplace. We'll kind of go through some selling ideas, a case study, and really just kind of lay the groundwork and explain really exactly how this particular product works. So there's a few things to cover here at the very beginning, kind of where we're different. Number one, at the end of the day, this is on a fixed index annuity chassis, so that's nice to be able to have that accumulation upside potential, that accumulation story with it being a fixed index annuity product. It is a flexible premium product, so the client definitely, if they wanted to be able to do so, could add additional money to the contract after it's been issued. Big one here, number 3 there, simplified underwriting with guaranteed approval. It's really nice. We've had a lot of producers have a lot of success going back to their existing book of business. Maybe they've offered some type of a standalone LTC type of a product, and the client unfortunately got declined. With this guaranteed approval component on the LTC benefit side, you don't have to worry about a client getting declined. That's something that you can always definitely hang your hat on. And with the simplified underwriting process, it's really very streamlined, very straightforward, and honestly does not take a lot of time to be able to get an underwriting decision back. Unique to the bridge product is a wellness program, something that we have found to be a very big selling point within the product itself. And really what the wellness program does is it allows the client the ability to age in place. By doing so, they put together some type of tasks or action plan items that they want to address health related to themselves. And by doing so, through the participation in the Never Stop Wellness program, they actually get additional Never Stop Wellness credits to their LTC benefit base on an every 2-year basis. So it's kind of nice to be able to help the client improve themselves from a health perspective and still get some benefit from it from a long-term care perspective. It is going to be an indemnity claim process, meaning we're not going to be asking for receipts, anything like that at all. Once the client has, let's say, for example, unfortunately have the ability to complete 2 out of 6 activities of daily living, we'll then start sending out those monthly LTC benefit payments to the client. And what the client uses that money for is completely up to them. So it is an indemnity claim process. Custom LTC benefit. We always phrase it one size fits none. And really what we mean by that is with this type of a bridge product, it basically allows the producer and the client the opportunity to really kind of sit down, dig in, find out how much LTC benefit, LTC coverage the client needs, and then you have the ability to put together a coverage ratio, and that's basically going to be determined by the client's age and then their underwriting class. And so it's nice because it's not really necessarily a one-size-fits-all type of an approach. Mm-hmm. Charge structure is very simple, very straightforward and laid out, and then this is going to be completely digital. So we do have a bridge microsite that we created at launch that is going to be your one-stop shop for anything and everything bridge related, meaning being able to get all of your marketing materials, schedule underwriting, and then of course submission of the new business via the e-application platform is all done digital. So really we kind of wanted to keep the whole new business side, underwriting side, digital, and really as very streamlined and straightforward as possible.
Yeah, do you know in this presentation if you're going to go over the availability, the state availability?
Oh, yeah. So I don't have a particular slide on the state availability chart. There will be a link in, I'll go through the Bridge microsite here a little bit towards the end. And on the Bridge microsite, there is a state availability chart or map. We're up to, I believe, 36 state approvals as of this morning. We just added Ohio right before our call, which is great news. So to answer your question about state availability, New Jersey, not quite yet. New Jersey, okay. Pennsylvania, we don't have either one of those quite yet. We do have Florida. Unfortunately, no go on California right now. It's just a slow process there. We're hopefully sometime in the near future we'll have New Jersey and Pennsylvania though.
Okay, awesome. Thank you.
Yeah, you bet. Great question there. We get a lot of questions about state approvals and options there. So, and so really what we did when we created this bridge product is there's 3 really main pieces, main components behind the bridge product. First, of course, is the long-term care coverage side. That's generally the primary reason why a client is putting premium dollars into this type of a product. Number 2 really speaks to the fixed index annuity chassis, the ability to protect and to grow the assets. And then the Never Stop Wellness program, which I had mentioned, is really an opportunity for the client, the ability to age in place and really kind of address maybe certain health-related events or health things that they want to be able to improve themselves upon. So that's really kind of how we came up with the Bridge name, is those are the 3 primary components that you're going to see within the Bridge product itself. What we've done is we've partnered with a group called Assured Allies. So Assured Allies is for those not familiar, we have a really, really strong relationship with them. They are a data technology and science company. And so what Assured Allies does is they are our partner to help out and complete the underwriting, first and foremost. But then they're also the group that administers the Never Stop Wellness program. So kind of twofold. I like it because you basically have like a one-stop shop for both the underwriting, and then of course the Never Stop Wellness program. But again, both of those are administered through a partnership that EquiTrust is created with Assured Allies. A little bit more about this Never Stop Wellness program. A little bit unique to a product such as this, we received a lot of really positive feedback. If you kind of look at this whole, cycle, number 1, it allows the client the ability to extend their independence, allows that client to be able to stay at home for as long as they possibly can, just delay and shorten or even avoid long-term care. Third, really like I mentioned a couple different times, empowering people to manage health outcomes. I mean, I can't think of too many clients or too many people out there who doesn't want to better their health, especially as they're continuing to age and get older. Slow down and shift that age trajectory, and then reduce the risk in age-related decline. And so I'll go through a case study, kind of an example of really how the Never Stop Wellness program works, and specifically look at a client and the specific kind of cap that they put into place for themselves as part of the Never Stop Wellness program.
Okay.
Here's a look at the LTC coverage ratio chart. This is basically an example of the 3 underwriting classes that are available. So you have secure, standard, and then preferred. And then off to the right there, you have your maximum coverage ratio, and that's going to be based upon the client's age. So here is basically going to be kind of like your catch-all. This is really going to provide that guaranteed approval. Nobody gets declined. Standard will be your next step up, and then preferred will be the highest end. If we just kind of pull a quick example out of here, look at somebody who falls under the standard underwriting class. They're age 65, so their maximum coverage ratio is 190%. So basically what this means is if we assume that the client puts in a premium of 100,000 and they maximize their coverage ratio out to 190%, their LTC benefit base starting value day one is going to be 190,000. So that's basically where they're going to start out at. And just keep in mind, like I said, it's nice to be able to have the ability to really customize this coverage ratio. You can slide that 190 down to 180 if you wanted to be able to do so. And we have a piece or a nice little chart specifically to age and underwriting class through the Bridge microsite that you can always take a look at to see what the maximum coverage ratio would be for a client based upon their age and then their underwriting class. Here are some of the basic product details, and honestly, very simple and straightforward here. So you've got issue ages 55 to 80. Minimum premium for the product is $50,000, so it's non-qualified money only. It is a flexible premium product. There is a 10-year surrender charge schedule. There is the basic general built-in liquidity, so the client has the ability to take out the 10% penalty-free withdrawals after year one, should that need arise. Of course, on the accumulation value side, that accumulation value potential, there are 5 different index accounts plus a fixed account. And then, of course, you have your flexible LTC benefit base on that LTC side of things. Here's a look at the rates, specifically on the Bridge product. So you currently have a fixed account at 5%. There are 3 different S&P 500 strategies, just one of your traditional straightforward S&P 500 annual point to point with a cap at 10%. And then at the bottom of the list there are 2 volatility control strategies, one labeled the Focus 50, Barclays Focus 50, and then the other one being the S&P Mark 5. And again, both of those are 1-year point-to-point participation rate strategies that are, again, going to be low volatility control type options that are really meant to ride out the highs with the lows. Great thing about the crediting rates here is you can see definitely built for upside potential. With the fixed account, currently paying 5% right now. We're seeing a lot of premium dollars going there. And then a lot of the premium dollars too are also going into just a very standard, very straightforward S&P 500 annual point to point with a cap design. But keep in mind, the great thing about this is there's no right or wrong approach to how you allocate the money as long as it adds up to 100%. That's the important thing. And then you'll always have the ability to reallocate that money on the contract anniversary, just like you would with any other basic standard fixed indexed annuity product. So really some very strong crediting rates, including a fixed account, really for that upside accumulation potential. A little bit more about the riders and kind of what's part of the riders offered with the Bridge product. So there is your standard nursing home waiver automatically included at no additional cost. There is the terminal illness rider, which again is automatically included at no additional cost. You do have the long-term care rider, which also is going to be automatically included. And this one, as far as the charge structure goes, it's kind of twofold. So you have a 1% premium load on any premiums that are put in the first year. And then there is a monthly LTC benefit rider cost that is calculated off of the client's age and then their underwriting class. And kind of how that's determined is, if you think back to the example where we're looking at somebody who was a standard age 65, they were maximizing their coverage ratio out to 190%. So they were at 190,000 starting point for the LTC benefit base. They put in a premium of 100,000. There's a $90,000 net amount at risk is what they refer to it as. And that 90,000 is what they use to calculate that monthly LTC benefit rider cost based off of the client's age and then their underwriting class. And then lastly is the Never Stop Wellness rider, which Remember, that's the program administered through Assured Allies, where the client can get those additional credits on an every 2-year basis, and that Never Stop Wellness riders automatically included to be part of the contract, and it costs the client $100 per year. So that's kind of a look at the 4 riders specifically that are part of the bridge contract. A few other additional pieces to keep in mind and think about. So remember, this is a guaranteed issue. This cannot lapse. It does offer those tax-free LTC benefits because this is an LTC benefit rider that's basically paying out. That's how we have the ability to offer those tax-free benefits. Flexible coverage. So remember, the client always has the ability to choose that coverage ratio specific to their needs and really how much LTC benefit they want to be able to receive. Inflation protection here. I like to talk about this one because, of course, inflation's not going anywhere. It's just going to continue to take, or get larger and larger. And what we've done with the LTC benefit base side specifically, if you think back to our example where the LTC benefit base was starting out at $190,000, we're going to continue to grow that by 2% compounded annually for up to a 20-year deferral period or until time of claim. So that's kind of our way to kind of really hopefully be able to have some type of a hedge against inflation. And then lastly is that ability to earn LTC coverage through the participation in the Never Stop Wellness program. So a few things to keep in mind as far as the LTC rider itself. So you have, as I mentioned, the 2% annual roll-up that actually gets compounded on a daily basis. The way we calculate the benefit for the client as far as what they're going to receive for the next 60 months is we simply take their net amount at risk. Remember our example before, $190,000 LTC benefit base with a $100,000 premium. So we had a $90,000 net amount at risk. We had that if there's any type of a vesting schedule, and there is a 4-year vesting schedule, which basically follows is 20% in the first year, 40% in the second year, 60% in year 3, and then 80% in year 4. And then once they're into year 5, it's 100%. There's no more vesting schedule that are 100% vested. So we basically just take their net amount at risk, multiply it by the vesting schedule if there is one, if that would apply within the first 4 years, just add their accumulation value, and then we just divide that by 60 months. And so that's how we arrive, or that's how we calculate the client's monthly LTC benefit that they're going to receive for the next 60 months. A little more on how the benefits are accessed. So basically, the client has to be unable to complete 2 out of 6 activities of daily living or has a severe cognitive impairment. The doctor provides a plan of care, and then the client must be a U.S. resident. Remember, the benefits are going to be indemnity-based. Of course, the client will need to go through an annual certification to continue the benefits, and then the benefits are going to be tax-free up to the IRS maximum.
Which is awesome.
Yep, absolutely. That LTC benefit tax-free.
Yeah.
Something we get asked quite a bit about is, just the underwriting process. How does it look? How does it feel? What can I and what can my client expect? Generally, the underwriting process itself takes less than 30 minutes. And so really the simple way to look at it is through the Bridge microsite is an option to be able to go ahead and schedule that underwriting. And you can actually do the underwriting and schedule that at any point in time. So you as the producer will schedule the underwriting for the client. You're definitely not required to be with the client during the underwriting itself. Definitely, if you have the ability to do so, I mean, we think it's a great thing, but definitely not a requirement by any means. So you schedule the underwriting interview through the Bridge microsite with Assured Allies. The underwriting interview itself with the client is digital. Typically takes about 30 minutes or less. Remember, there's no decline at all, so it's 100% guaranteed issue, or guaranteed approval. Once the client's gone through the 30-minute underwriting interview, you as the producer will get an email, generally within a couple hours. It's pretty quick. And it's basically right within that email is going to outline which one of the 3 underwriting classes the client's going to fall into, secure, standard, or preferred. There are no medical or prescription records, anything like that gathered at all, so very simplified from an underwriting perspective. There are 5 different, they're phrased as application questions. The first 3 specifically I don't want to necessarily refer to them as knockout questions, but with the first 3 underwriting questions, which you will easily have the ability to go through, review those, answer those prior to scheduling the underwriting. But with those first 3 underwriting questions, if the client answers yes to any one of the first 3 underwriting questions, it actually automatically places them in the secure underwriting class. If on the flip side, though, let's say they can get through those first 3 underwriting questions and they're all no's, perfect. Then you have the ability to move on, schedule that underwriting to see if the client maybe come out better at standard or preferred. And keep in mind too, this is really nice, and I've actually heard quite a bit of positive feedback about it, is the client does have the ability, if they wanted to be able to do so, to just opt out of underwriting altogether for any reason whatsoever, doesn't matter, and it automatically places them into the secure underwriting class. And so that's always an option if somebody says, you know what, I just don't feel like my health is the best. I don't feel like going through that underwriting interview is going to be the best use of my time. I'm okay with being in the secure underwriting class and getting some type of an LTC benefit. So that's kind of just a little bit about what takes place during the underwriting process. And generally, the easiest and the most simplest way to explain it to a client as far as being able to prepare them is there's just some cognitive that the assured allies is going to be checking for, and then just some basic mobility, asking the client to stand up, sit back down, just basic things like that. So that's really the primary things that they're checking for during the underwriting process itself. We actually have a really nice video too out on the Bridge Micro site. It's about 3 minutes in length or so. It really does a great job of explaining how the underwriting process works, what to expect, what all takes place from a client's perspective. So, we've gotten so much positive feedback on that, just people saying this does a really good job of preparing not only me to be able to explain to my client, but also my client to understand kind of what's going to take place during the underwriting itself. Quick example here. I think this will kind of really start to hit home with everything that we've talked about so far. So we've got a client age 65. He's retired. Yes, he's single with 3 grown children. His 3 primary objectives: he wants to live it independently for as long as possible, preserve his assets. He doesn't want to be a burden on his children for assistance as he ages. So initial premium that he's put into the bridge contract is $250,000. He goes through the underwriting, determine that he's preferred. The maximum coverage ratio for his age at 65 is 275%. So he decides, I'm going to maximize my coverage ratio. So his initial benefit base will, of course, be the $250,000 minus the 275% coverage ratio. So we're going to start out his initial benefit base at $687,500. Pretty simple math. Of course, he goes through the Never Stop Wellness program. He takes part in that. Here's what his successful aging plan specifically looks like for him. And again, these are just 3 examples. So sleep health. He wants to improve his sleep. So he uses a Calm app, works with the Wellness Ally to improve his sleep. His participation in that is a couple hours per week. He wants to be able to address his hearing loss. He gets tested. He gets hearing tested done, gets his online screening done, gets some new hearing aids, and his participation in that is just one-time hearing tests and, of course, being fitted for hearing aids. And then lastly, the stress reduction. So he starts to take part in yoga, regular exercise, and he does this on 2.5 hours a week. So those are the 3 things that he specifically has put into place for himself with the Never Stop Wellness program. So fast forward 10 years later, the client has developed an illness and he's now qualified for the LTC benefits. So his new benefit base, remember we have the 2% guaranteed annual roll up on the LTC benefit base side. So we're at $838,059. He's received some really nice Never Stop Wellness credits over the past 10 years of $56,891. So if we add those 2 up, his total benefit basic claim is $894,950. So we just take that dollar amount, divide it by 60 months, and we're at $14,916. And that's then the amount that the client's going to receive each month for the next 60 months moving forward. So kind of just a quick case study and example of kind of what the actual numbers look like for somebody based upon these specifics. From a sales opportunities perspective, kind of working from the bottom up, annual reviews are always going to be a great option. Working through that current client base that you have. Definitely this is a great alternative to traditional LTC, standalone LTC type coverage. being able to hang your hat and offer that guaranteed issue for somebody who's maybe potentially uninsurable. We've had a few producers who have had a lot of success just going back with their current client base, where unfortunately the client's been declined for maybe some standalone LTC coverage, and going back and offering the bridge product with the guaranteed approval and the guaranteed issue side. Sources of funds, money markets, checking accounts, savings accounts, CDs are all going to be very popular. And then, 1035 exchanges from annuities or life insurance. Something we're hearing quite a bit about that's working really well for a lot of producers is you have a client who has a lot of taxable buildup in another annuity contract that's many, many years old, outside of a surrender charge period. And maybe they're looking for, these types of benefits that the bridge product offers. Great opportunity to be able to do a 1035 exchange from that existing annuity contract over to the bridge product, and kind of help with all that, sizable taxation side that the client has received, could potentially receive because of all the nice taxable gains or the interest that the clients received on their existing contract. Just a little bit about licensing and training here. On the Bridge microsite is a chart. So each state kind of sets their own rules and regulations when it comes to this type of being able to sell this type of a product. There may be some CE or continuing education requirements that you'll need to complete specific to your state. And then some states will require that you have your health line of authority license, others not necessarily. So you'll have the ability to check all that. And then, of course, you'll have your EquiTrust product training that will need to be completed prior to writing any new bridge business. There's the address right there for the Bridge microsite at the bottom. It's just pretty simple. It's just agents.equitrust.com/bridge. And there's a lot of great information out here that you can look at, access without even having to log in with the username and password. Marketing materials are all out there. The full illustration software, the quick calculator is probably one of the pieces that gets utilized so much, just simply because within a few simple data inputs, you can find out exactly what the client's underwriting or what their LTC benefit's going to look like. As I mentioned, scheduling the underwriting right through the Bridge microsite will be the place that you'll go for that. And then anything with regards to licensing, just kind of like I had mentioned. So kind of as a wrap up here, just remember that from a sales experience, this is a fully digital process, really to make it as easy for you and your clients. So an electronic application process via the e-application platform on the Bridge microsite, that convenient, really easy to use underwriting video, and then your quick underwriting decision. You're going to get that underwriting decision back generally within a couple hours from when the underwriting interview has been completed. So those are really kind of your main selling points, on the Bridge product. Like I said, we launched this November 15th of last year. As we've continued to really pick up state approvals, we're seeing a lot of production coming in with this particular product. And really the biggest selling points behind the product that we're hearing the most about are that Never Stop Wellness program, the indemnity claim process, and then just the ability to really, maximize or utilize a coverage ratio to determine how much LTC benefit the client ultimately wants to receive. So with that, Brett and Adrian, I'd definitely like to turn it back over to you guys.
Okay. Are you able to hop onto that microsite and kind of show us the availability?
Let's see here. Yeah, let me go out here quick. And
because Maria is asking about New York, which I think at this point we always
know.
Is.
Yeah, so we don't have, let's see here, let me make sure this is showing right. So New York with us, we don't have anything available in New York at all, even just on our other product side. So we won't have anything available in New York, but here's kind of the look of where we're stand out from a state approval process, from a state approval availability perspective. Everything there in green is approved, and then some other states out there like California, and then some of the other states out on the East Coast, we don't have it approved yet. So, but that's kind of where we look at from a state approval perspective right now.
Okay, awesome. Yeah, thank you for sharing that, because we do have brokers all over the U.S.
Absolutely. It is a challenge up there in that northern eastern, part of the world to get something that really works for them.
Yeah. We state approval wise, some of the bigger states that we just picked up within the last month or so: Washington, which I know can be a big one; Texas, Colorado, Minnesota, and then, like I said, just as of this morning, we just added Ohio. So hopefully, fingers crossed. You'd asked about New Jersey and Pennsylvania before. Trust me, those are two big states for us, just generally speaking, and so we're doing them as much as we possibly can to get the bridge product approved in both those states.
Absolutely.
Okay, very cool. I love that you can easily get to this without having a portal to one less login to have to worry about.
Absolutely. It's super easy. It's very convenient when you have that ability.
Marie says
Yeah.
that she's just happy it's in Florida. So at least you got one state, Marie.
Oh.
One out of the three.
Yeah, we're
So
excited to have it in Florida.
I do want to open it up for questions. So please, 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 if you have questions for David, please ask them. He's obviously going to be the best person to ask. So please take advantage of this opportunity. But I kind of want to touch on why selling products like this are beneficial. And I've been to some trainings and I've been to some conferences where they talk about annuities, and the best one that you can do is one that offers long-term care coverage. Do you have a specific reason on why that is?
It's a good question. I did a decent amount of traveling in the fourth quarter of last year and then the first part of this year, and having a lot of face-to-face conversations and talking a lot about bridge. It's just that growing need for, LTC type of a benefit that the clients ultimately, whether they want to be able to talk about it or not, it's definitely a growing concern for a lot of clients. And then also, when you think about it too, there's just simply not a lot of companies, a lot of carriers that just offer LTC type of insurance anymore. And so kind of being able to offer some type of a hybrid type of a product that has that fixed annuity or fixed index annuity chassis with, some LTC benefits is really where this type of real product shines. And I think a lot of it just unfortunately comes down to just a lack of options from an LTC perspective.
Yeah, that too. Definitely.
The long-term care world has been pretty difficult.
Yes, it is. And so, do you mind going back to this slide where you broke down how much they would be getting for the monthly coverage?
Yeah.
Because kind of how it was explained to me, and maybe I misunderstood this, but was that a lot of people that do get annuities, when that time comes where they do have to have that care, they end up having to spend all their money on that.
Yeah, pocket, right.
Gotcha. So was it the LTC coverage ratio chart? Is that the one that you were referring to?
No, the one further down where you basically say they get $14,000 a month for.
Oh, yeah. Okay. Sorry, that case study.
Yes, case study.
There we go. Got it. Okay. Yep. So there it is right there. Yeah.
So that's for just the LTC benefit, right? So all their other, I guess what you're protecting their assets still. They're not losing. They're not having to take away from those assets. This is just something additional.
Oh, yeah, right. So, yep, I get what you're saying. So it's definitely an LTC benefit, like we had talked about. With it being the tax-free benefits. Of course, for example, in this particular scenario, the $14,916 is the amount of benefit that the client's going to receive for the next 60 months. Of course, that does come out of their, accumulation value side because it is money that's actually coming out of the contract. But still, again, it's something that the client can utilize for really whatever they want to be able to utilize it for, because it's an indemnity-based type of a reimbursement. So that's really something that we've really heard is super nice, that the client doesn't have to send in those receipts and they don't have to use this for truly something LTC benefit related. They can really use it for whatever they want to.
Right. Yeah, no, that's really an amazing feature. And then also if they never have to use it, right, which would be ideal, then then that's just still all there for them as needed.
Yep, exactly. And and the question comes up too, what happens if the client passes away? And it's simply just looked at just like a standard annuity contract would. So whatever is left and remaining in that accumulation value side is what gets paid out to the beneficiary. So definitely still have something potentially available to pass on from a beneficiary perspective.
And that wellness credit is a pretty cool deal. I don't think I've seen that in any annuity
right
that I've worked with.
Yep.
That's a pretty good size credit over 10 years.
It pays to take care of yourself.
It does. That's for sure.
You got it. You got it. You got it.
Now, David, I did have a question. Is that you on the screen here?
It's funny. It's, as many times I've presented this is the first time I've been asking. I've just been waiting. I'll just say that, yeah, although I don't know that I necessarily want to be single when I'm 65 years old. Hopefully I'll still be married, but I don't know. I guess we'll wait and see on that, right? But I don't know. To be determined.
I love that. Okay, so I do see some people still on. I know we're a few minutes over, and I don't see any questions coming through, but I know that it has a lag on it sometimes. So please, if you do have questions, put them in the question box so we can get them answered. Do want to put the plug in, that of course Eldercare is offering the contracting for this. If you're interested, please reach out to Brent. He is our life and annuity marketer. He's going to be the one that can get you set up, with the commission levels and the contracting and all that. And then of course, Eldercare offers reward points for all those sales that you do with us. So please consider that. Don't forget that we do offer those reward points for those additional products. I know that
Absolutely.
We mostly do the Medicare products, but we absolutely want to make sure that all of you are aware that we do more than that. We do have the opportunity for you to be successful selling annuities as well.
Yeah. Hey, and this is one of those things where it definitely creates a conversation because, like I said, again, the wellness part of this I've never seen. It's one of those things where, again, it pays to take care of yourself. So that's a really good conversation you can have with your clients. You just folding it all in. I think annuities are always so gauged towards, how, accumulation, how much more can I make, and where is this and where is that, and you're able to hit them with a question like, hey, are you taking care of yourself? And I think that just kind of changes the conversation as well, and it kind of gives a different outlook. So as many people as I talk to on a day-to-day basis, I think this is one of those things where this is very helpful when it comes to the ease of selling annuities.
Absolutely. I do kind of want to, Marie had asked a question, but I think you had answered it. She had asked what the minimum investment was, and I think I remember the slide said 50,000 for the minimum, right?
Yep, you got it.
No,
yep, 50,000 minimum. Yep, you got it.
Okay, and then we just had a question from Carrie. What if someone only needs for 3 years? Does the monthly benefit come out of the base benefit, or how much would be left for death benefit?
Oh, gotcha. So it is, so basically if the client would qualify or only needs that LTC benefit for a shortened period of time, it doesn't change the amount of benefits that the client receives because it's calculated over a 60-month period of time. But again, whenever it comes out of the contract from an LTC benefit side, does get deducted from the accumulation value side. And so at the end of the day, however much came out from an LTC benefit perspective will get deducted from the accumulation value side. And then whatever's left, of course, in the accumulation value side when the client passes away is what gets paid out to the beneficiaries, just like an annuity contract would.
Oh, okay. All right. Thank you for asking that question, Carrie.
Good question.
Absolutely. Well, I don't see any further questions coming through. So David, I think you did an amazing job. Absolutely appreciate you taking the time to talk to us about this. Absolutely appreciate all of you agents taking the time to learn about this product. We're very excited to offer it to all of you and excited for the feedback. I feel like there's a lot of interest in these products, so I'm excited to hear the feedback from it all.
Absolutely. I look forward to speaking to each and every one of you. Always hit me with the questions because that allows me to ask David those questions and get more answers. Again, thank you, David, and I appreciate everybody for attending.
Absolutely.
Thank you guys so much.
Have a great day.
Take care, everybody.